I didn't know that this is a dress code. Had I known, I would have also tried. Although it will be a little bit, difficult for me to really fit in with this there, because, you are, I think, prepared to, dance to glory today and maybe, have lots of culture and so on. So congratulations to all of you for Diwali and for this invite to me. MDs and CEOs of our market infrastructure institutions, office bearers of the BSC Broker Forum, colleagues, ladies and gentlemen, good evening to you all. It's a privilege to be here today among the people who build and power our capital, market and financial future. The theme of this event, Reimagining India's Financial Future, is a timely conversation in the present unprecedented context. We face huge challenges from turbulent global events and new technological waves. Alongside, we also have unique opportunities of our demography and economy and collective vision of a Viksit Bharat. On any given day, our security market infrastructure handles a staggering volume of activity. In the last financial year, our stock exchanges on an average handled over 1,600 crores of messages daily, with a peak of over 2,900 crore messages. Behind these numbers is the trust of crores of investors. This is a trust we must always protect. We need a financial sector that is resilient in terms of size, capacity, skills, and regulatory framework. Today, as we look towards 2030, I will share with you some perspectives on challenges and opportunities for the pillars of this regulatory framework. Our first pillar is technology. The future of market resilience is digital resilience. But any technology comes with its own risk. The use of algorithmic and high-frequency trading has witnessed significant growth. Currently, such trades account for significant volumes in our equity and derivatives market. We will constantly update our regulatory framework in this regard to ensure a fair, transparent, and resilient market. Similarly, a cyber incident at one institution can destabilize the entire ecosystem. We have issued a comprehensive cyber security and cyber resilience framework for such scenarios. Guidelines for air gap, a key component of this framework, will be issued in consultation with the MIIs. Our MIIs are being stress tested with live disaster recovery drills. We have even implemented a redundancy model for our clearing corporations, where if one CC is down, its operations can continue using the services of another CC. We are also examining implementation of a safety net in the case of outage at a depository participant, as done for stockbrokers. On the surveillance front, we are moving from reactive supervision to predictive oversight. We have revamped our data warehouse system to develop new rule-based alerts to identify pump and dump patterns and to detect fraudulent trades in bulk deals. Our second pillar is inclusion. A resilient market is a deep market with broad and informed participation. Our recent nationwide survey reveals the opportunities and challenges facing us. And let's see some of those which have come out of a survey. 63 households are aware of securities products, but only 9.5% participate. Urban participation is significantly higher than rural. We expected it. It is 15% versus 6%. 36% investors possess high or moderate knowledge of securities market. So we have a long way to go in investor awareness. We have simplified KYC norms and permitted transactions in securities as soon as this process is completed. However, we are yet to establish an easy and secure KYC access for NRIs to facilitate their participation in the securities market. This will be an urgent goal for us. Video KYC, for example, will be necessary, and we are already testing it in consultation with UIDAI and RBI, a system where we should be able to, make it happen for allowing the KYC to happen for NRIs, and they don't have to come to India to do this. I hope this will be a very important development once it comes. Protecting investors from cyber frauds and misleading advice of unregistered influencers will continue to be a major objective of our efforts in collaboration with all market institutions and intermediaries. I wish to congratulate you all in wholeheartedly joining up with Sebi in rolling out of @valid UPI handles and propagating use of Sebi Check through Sebi website and Sarthi app. Our security ecosystem will need to make this message reach out to investors and potential investors in every nook and corner of the country through creative, multilingual, multimedia messaging under the broad umbrella of Sebi versus Scam campaign. And I seek your indulgence, and I will, need you to actually clap in unison for a very important job that you have done and something more you need to do. Each one of you has been affected alongside the investors in getting, many people have been scammed out. Their hard-earned money has been evacuated through mule accounts, through cloned apps, broker apps, and it is our bounden duty to let it not happen. And therefore, whatever systemic efforts that we have made through your efforts, the efforts of all others, banks and, other intermediaries and the MIIs, we need to propagate this message now that we have truly another subsystem of UPI in place to see that this message reaches out wide and far. In the mutual fund space, we have recently incentivized bringing in first-time investors from B30 cities and first-time women investors in all cities. And there are many lady CEOs present here. I thought at least they should clap. I think everyone should clap. Because unless and until we bring gender into this, unless and until we bring a half of our population into the mainstream of investing, we really can't we can't gloat over what we have done in terms of number of investors. We must have also parity in the gender of investors, and so that's what this whole aim is, to bring about this change. The daily traded volumes in our cash equities market, which is the foundation of capital formation, has almost doubled to over INR 1 lakh crore over a period of just 3 years. However, more is required to be done to further deepen the cash equities market, and we will review our SLBM framework consistent with risk management to make it happen. On the short-term derivative side, especially the index options, many regulatory measures have been taken following analysis of detailed data. Continuing this approach, we will be thoughtful and consultative in suggesting further measures to improve this market consistent with risk awareness and suitability of investors. Stress testing small and mid-cap MF schemes directly enhance market resilience. Their outcome empowers investors to make informed decisions while requiring fund managers to ensure prudent liquidity management. But inclusion has to go hand in hand with education. We will be rolling out awareness and education programs to help investors align their investors and risk tolerance, thereby contributing to a more resilient investor base. And here I want to congratulate all the market infrastructure institutions, especially exchanges and depositories, for their excellent efforts in trying to bring investor education to various measures, and they will have to continue to do so for quite some time as millions of new investors keep coming in. This task of investor awareness in true sense of responsible investing is everybody's task. Our third pillar is governance, because trust is built on a foundation of unimpeachable governance. High standards of corporate governance are essential to protect the interests of all shareholders, especially minority shareholders. We have mandated that no director can have permanent board seats without periodic shareholder approval. At least one independent director, or steward for accountability, must be part of the board meeting quorum. Minimum information is to be placed before the audit committee and shareholders when approving related party transactions. We have prescribed them. The governance standards in MIIs have been strengthened to ensure public interest is prioritized over commercial interests. MIIs will now have to appoint 2 executive directors to the governing board to mitigate the key man risk of the managing director overseeing the regulatory and operational verticals. Our fourth pillar is product innovation. A resilient market needs diverse instruments for raising capital and to manage risk. I urge the industry to co-create such new products and opportunities. We have introduced frameworks like mutual fund light for passive funds and specialized investment funds to bridge the gap between mutual funds and PMS. Choti SIP has the potential to create a significant impact in the years to come. And if there are any barriers for its propagation, we must look at it, remove those barriers, and go ahead, because that is where a small investing, timely investing, regular investing, long-term investing, that will be a very essential part of responsible investing campaign. Strengthening India's commodity markets, both agri and non-agri, is high on SEBI's regulatory agenda. Electricity derivatives have been introduced to deepen India's power markets. Many other commodity derivatives have the potential if we are able to help resolve some key issues, and there are some key tax issues also in terms of delivery of commodities across different states, and the GST issues, and so on. And we have these working groups working on that, and we will take that matter forward. Our commodity markets need to be much more active than what they are today, and we should remove different barriers which help them grow in order to really provide very, very strong avenues for hedging. And Mr. Sundarmurthy was mentioning about it, that, when we are huge consumers of commodities, what is our role in price formation, price fixing? We can't be price takers, we should be price fixers. The corporate bond market remains a key priority. We have opened this market to retail investors by reducing the minimum ticket size for privately placed bonds to just 10,000 rupees, and by putting in place the OBPP framework. And it's a very interesting example, OBPP. Actually, in 22, we found that there were many unregistered bond platform providers were providing this service. So one would have said, oh, how is it that unregistered people are doing it? But sometimes regulations develop out of necessity. This was a gap which was happening. There was no way the individual bondholders, if anybody wants to do that, it's such a privately placed OTC market between institutions that no one who wants to invest, there was any avenue to invest. And they were providing this particular thing. So therefore SEBI came out with a regulation. And since then, there is a very steady growth of this market. Of course, we need to do much more. But a channel has been opened for people to enabling the people to access the bond market. We are also supporting the bond market with backstop facilities like the CDMDF and a repo market through the ARCL. Much more is needed to be done in this space to rationalize regulations, and we do have some ideas. Create awareness, investor awareness of bond market, as well as widen and deepen the market through several measures, including introduction of bond derivatives. We must also encourage risk capital. AIFs are now a robust engine for channeling patient, risk-seeking private capital to support entrepreneurship and innovation. Several measures have been taken recently to facilitate orderly growth of AIF industry. We will take further measures to promote accredited investor framework. REITs and InvITs are transforming into important asset classes in the capital market, providing new choices to investors and new opportunities to issuers in the real estate and infrastructure space. SEBI will continue its focus on offering investors more choices for appropriate asset allocation, attuned to individual risk appetite. Our fifth pillar is efficiency. We are committed to simplify our regulatory framework for ease of doing business without compromising investor protection. We have cut the IPO listing timeline to T+3, giving issuers faster access to capital. Rights issue timeline has been reduced to just 23 days from an average of 317 days taken earlier. Scale-based thresholds have been introduced to determine material RPTs to facilitate ease of doing business. The Samohik Prativedan Manch, a common compliance platform for stockbrokers registered on multiple exchanges, will substantially reduce compliance costs. The penalty structure for stockbrokers has been rationalized to create a consistent and fair system. I had a meeting with some of you, and you had actually narrated during the time some of the difficulties that you were facing. And indeed, we never knew, at least I didn't know, that there are so many unfair practices, although they are emanating from regulations. And fairness is the way to go, whether it comes to our industry, whether it comes to intermediaries, whether it comes to investors, whether it comes to exchanges. A fair, predictable system, always willing to change, always willing to self-introspect, will be a system which will be dynamic and will take our capital market forward in 2030s and beyond. As you are aware, we are on course to rationalize and simplify comprehensively the stockbroker regulation to reduce cost and compliance burden consistent with appropriate risk management. We have already received many suggestions to SEBI's consultation paper, and hopefully I think some suggestions might also be coming. And very soon we should target maybe December as the date to sew it up and go for changes in the stockbrokers regulations and rewrite it. We have taken steps to rationalize FPI regulations. Compliance requirements for FPIs investing in government securities have been eased. The Swagat FI framework will offer a single window for trusted foreign investors, offering unified registration and lighter compliance. Our immediate goal now is to make the entire FPI registration as a portal-based, simple, fast, and digital process. We are already consulting our stakeholders to implement it, and I said in one of the media interaction, we would like to be the best in the world, among the best in the world in terms of facilitating registration. There is no risk to it. It's only the process issue. How we can bring RBI, Sebi, income tax, other stakeholders together in order to provide a facility of complete digitized experience. And India, we are proud that we have huge systems where we have implemented completely digitized. You remember in COVID time also how we just had administered 2 billion COVID doses in a system where we didn't have to carry any paper. And hundreds and thousands of hospitals were woven into in a matter of a few weeks. So the capability, India's capability in digitization at scale is well demonstrated. There are examples after examples after examples. Unfortunately, I didn't find that in FPI registration we have the same issue. So if we just do it, we can just do it. And so therefore that's a window. FPI registration for portfolio investors is a window to the world. And if in the window itself, if we will have cobwebs, then obviously we won't get into the glory. So this is something which is nothing to do with risk. It's more to do with our identifying the issues and addressing it. In closing, the growth of our securities market has been remarkable. We all can take pride in the market that we have helped build. We must now ensure that this growth is sustainable. Our collective goal must be to build resilient institutions, not just successful businesses. An institution proves its resilience by innovating across the spectrum to create products and services that will genuinely deepen our markets. It prioritizes the long-term financial well-being of the clients, understanding that client trust is the true source of resilience. Let us all work together to build such a resilient market. Thank you. Jai Hind.